morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. Our toll-free number, 800-951-0592. How much longer are you going to wait? That's really, you know what? I think that's really the only question out there. How much longer are you going to wait before you realize, you know what, I better get some safety in my portfolio. I better put some gold and silver away, get some savings put away while it's still reasonably affordable. allamericangold.com. That is the website. And Jason, it's been a rip-your-face-off rally pretty much all week in gold and silver. Gold's up 26, silver's up 55 more cents today again. And it's something is amiss here. You know, we had Walmart come out with earnings today. We had Macy's. We had Cisco Systems. Remember Cisco Systems from the tech bubble era? All of them with different stories, but very, very similar. Cisco Systems, orders have stopped. Walmart, which hit an all-time high yesterday. The stock was up 20% year to date, down 8% this morning. Essentially, we know, of course, up 20%, down 8%, kind of, you cut it in half almost, all of the gains. And listen, they beat, not by a lot, they beat by a penny. But it all had to do about, hey, what's up with the consumer? What's going on with the consumer? And the Walmart on the conference call said it's getting slower. Now, the good news was they said in some categories, now they didn't say what categories, inflation is starting to ease in certain categories. But they said that the consumer is definitely running into trouble. And of course, the problem is, general merchandise sales. That's kind of your sales, right, Jason? Hey, I don't necessarily need it, right? I don't need the shoes right now, or I don't need that blouse or that pair of pants, things of that nature. That's what Walmart is saying. People aren't buying anymore and essentially going in and just buying food. And that's one of those things where when we talk about what's happening, very interesting. Now, the good news for them, unlike Target, sales are still up, and they expect sales to be up about 5% year over year, but that was below what expectations were. And then we had Macy's today. Believe it or not, their stock's up, but it shouldn't be. Sales down 7%. They just said, hey, we've done a better job controlling our inventory. But Jason, the pattern, very, very clear. We've had a lot of retail earnings. Burberry, which is a high-end, their sales getting, I think their stock's down like 20% today. It just seems like the consumer is pulling back on what we'll call the non-essential.
You just laid out the entire thing right there. I mean, when Walmart's doing good and others are doing bad, that usually is hey, got to go to Walmart this time. That's really what that is. I don't do any of my grocery shopping at Walmart, but I do get cheap items from Walmart. I mean, there's no reason not to. If simple items at the same quality could be had at a lower price, that's pretty much how it works, Joe. And when people are watching their money closer, which they are now, it kind of echoes the situation you just laid out.
Yeah, and again, I think it's setting up. We had jobless claims today, the highest in a long time. Over 230,000 people filing for unemployment claims. And, it's hard because if you go back to before COVID, 230,000 would have been, okay, that's not horrible. But when we've been doing, 200,000, 210,000, well, 230,000 plus seems like a big number. Continuing claims, that's the one I kind of watch more than anything because that tells me, okay, once you've lost your job, can you find another one? Big jump in continuing claims, 1.87 million. And I keep telling everybody we want to watch 2 million there. We get above 2 million, then you need to start to worry. But you got to remember, this is what Jay Powell and the Fed have been talking about. This is what they want. Right? Hey, we want some people to lose their jobs, and Jason, it appears to be happening. But I just really uncomfortable today and all week because something's wrong here. Something isn't adding up. We had the big sell-off in the bond market on the 1/10 beat on inflation. And it kind of was just like, okay, wait a minute. I could get it if it was like 0.5%, 0.4%, but a tenth. I mean, really kind of almost like, a rounding error. Why is that such a huge deal? Remember, we had a big Wall Street rally. We had all that stuff happening. Why do I have the feeling not only is there liquidity problems in the sovereign debt markets, our treasury markets, the Japanese markets, the European markets, why do I get the feeling that maybe the banks' balance sheets aren't as strong as they're pretending they really are? Just a feeling. We'll be back after the break. $800-951-0592. Quick look in at the markets here. The Dow is down about 150 points right now. The S&P's down 10. The Nasdaq's down 50. Gold's up 26 and change. Silver's up 53 cents. The 10-year note, crazy moves. Just the volatility in these markets. You don't see. This is supposed to be the deepest market in the world. What does that mean? Well, that means you don't get big swings, right? Look at I always tell the story about gold and silver, right? Gold's big brother, silver's little brother, and silver can just be wild. Look at this week. I mean, silver was 21.75 at one point a couple of days ago. It's now 24 and change. I mean, that's a huge move. It's moved almost 10% in a few days. But that market, the silver market's not very deep. Right? I mean, J.P. Morgan's the big player in it. But what I mean by that is it doesn't take a lot of money to get a big move. Where gold is, it's a deeper market, right? So it takes more money. Like gold being up $26, that's a lot of money going into gold. That's a lot. The treasury markets are up 10 times bigger than that. So when we see the 10-year note day in and day out moving full basis points, moving multiple basis points in a single trading day, that is unheard of. It's not supposed to work that way, right? It's supposed to be like almost like a glacier, because they want you to have the illusion of what? Well, it's fine. See, it's fine. Doesn't really move a lot. We've had incredible volatility in the treasury markets that we have really never seen before. And this is a warning. And there's not a bigger warning. I'll be honest with you. There's no bigger warning than what has been happening in the Treasury markets. And you think about what Congress just did, right? That whole Speaker of the House and government shut down. And what did they end up doing? Now, let's just keep spending. Even though the markets are saying, dude, we got a problem. Well, we got to just keep doing it. You need to be diversified. That's why we talk about gold and silver so much. I truly, every line in this building should be lit up right now. Why? Because premiums haven't been this low in years, at least 3 years, maybe 4 years. And the fact of the matter is, the most important market in the world, it's not the Dow Jones. I know they want you to believe it's not. It's the U.S., at least for the United States, it's the U.S. Treasury market. And it's telling you there's a problem. That's why we also say, check out our friends at Y-Refi. You can get up to 10.25% return, and it's fixed. What does that mean? I don't care. It doesn't care what the 10-year note does. They don't care. It can go to 5, 6, 7. It can go to 4, 3, 2. And it doesn't change. It's not correlated to the stock market. Be diversified. Check them out. If you got $50,000 or more, call them. 888-Y-REFI-24. You can look them up at investyrefi.com. But call them. They'll walk you through. How can they get 10.25%? That's ridiculous. Believe me, I said that right to Lane's face. When the owner and I sat down, I said it right to his face. Come on, man. Can't do that. Show me. Tell me. He'll tell you. It makes 1,000% sense. Check it out. investyrefi.com. So, continuing claims. It's the highest levels in 2 years. And here's the problem. Right now, the seasonal adjustments are understating the claims. Now that we're in the holiday season, it goes the other way. Because they're trying to say, well, I know they're seasonal hiring, but we don't want to count the seasonal people, so it'll go the other way. Jason, I wouldn't be surprised if this number surges to over 2 million, which I think will be another one of those indicators that things are slowing faster than people think. And let me give you this, because, gold's right near an all-time high here. I mean, we're not even $100 away from an all-time record high in gold. Gold is at record highs all over the world. Everywhere. Malaysia, Thailand, Indonesia, Turkey. I mean, all over the world. Gold's at all-time record highs. And again, Jason, it's not just our problem. We're not the only, listen, we're still selling it. We haven't had a failed auction. And quite honestly, we haven't been that close. But we're getting closer and closer and closer. The amount of people, the amount of bids that we get every week keeps falling. And here's the problem. The amount of debt that we need to sell keeps rising. So, you see where we're headed. But all over the world, Jason, this is a problem for pretty much every major country in the world right now.
The last time we said that the rest of the world was at record high in gold, and America was 2019. And then it was the very next year that gold hit its record high in America, and you had COVID going on and all kinds of chaos. And so next year sure seems like an all kinds of chaos type of year, Joe. We were talking this morning, and sure seems like a lot of things are set up for gold to hit its all-time high here, and maybe in the short-term future. It could hit it this month or next month. It very likely could, but by next year it will be at record highs. And then the only question will be how much higher will it go? When Joe talked earlier a few minutes ago about the premiums on gold being lower, with gold just a little bit higher than it is now, I think that just last year, we were selling $20 gold pieces for $2,500. Right now you're at about $2,200 for that $20 gold piece. So it is still a really great time to be buying because the premiums will come back when the so-called chaos ensues next year, Joe.
Yeah, and same thing, Silver Eagle. Silver's at $24. Man, you go back to 2001. If silver had been at $24 at 2021, you would have been paying, I don't even know, close to $850, $900 for a roll of Silver Eagles. You would have been paying somewhere in the lines of hold on here, let me use my calculator, well over $20,000 for a case of Silver Eagles because the premiums were so high. Look at today. I mean, it's an absolute, I hate to say it, but it's kind of a steal. $625 for a roll of Silver Eagles, $15,500 for a case of Silver Eagles. I mean, just this week, a case of Silver Eagles is up, $1,250 just since the week started. And I'm just telling you, it's a fantastic opportunity. $20 gold pieces, $2,195. You want to do some volume, you want to buy 20 or more, $2,175. I mean, it really is a great time to be in these markets, Jason, because like I said, we're getting the benefit of gold hitting all-time highs around the world. We have a debt problem. Everybody wants to assume that somehow the banks got magically safe again. Did they? Are they? Or is there more problems coming? Commercial real estate continues to get worse. Now, all of a sudden, the consumer, I mean, Walmart is kind of, when you want to find the real truth about the consumer, you go to Walmart. They kind of said it today, right? Which means everybody that isn't Walmart is doing worse than Walmart. And in the case of, other retailers, a lot worse. Lower tax revenues. But yet the government won't stop spending. The surplus money in the reverse repo, it's disappearing like we haven't seen. The pace is incredible. What happens here? And this is why I said I'm so confused right now. Something's wrong. Something is wrong in the system right now that's telling a lot of these Wall Street guys, because let's face it, when I tell you spot prices, that's paper gold. It's not physical gold, that's paper gold. They're going into gold right now, Jason, which tells you two things. Number one, I think that there's a lot more trouble in the banking industry and in the debt industry in total. Walmart, how does Walmart fall 8% in a day? That's another one. Walmart's huge. That's a huge move. And I get the feeling that these banks have been playing a lot of games with the numbers. One of the things they've been allowed to do to make their unrealized losses look better than what they are is saying, well, we're going to hold those to maturity. And they just keep hundreds of billions, and we're holding, pretty soon, okay, you're holding everything to maturity. Of course, that only makes it look good on paper. The second they've got a problem, Jason, what's going to happen? Well, we're not holding it to maturity. We're going to sell it, and we're going to sell it at a huge loss. And I'm just wondering, are these corporations, is the money that they leave in the banks, is that dropping? I think so. The everyday consumer, the average balance in their bank accounts keeps falling, right? So that means what? Less deposits. And a lot of these banks, and I'm not talking about the big 5, 6, 7 banks. I'm talking about banks, let's call it 10 through 100. They've been offering these sweetheart deals to hedge funds and big depositors who, what did we learn earlier this year? The second they think you've got a problem, they don't care what kind of deal you're giving them, they're going to pull their money. I don't know, Jason. It really is odd watching what's happening right now.
And I'll just keep saying, I think inflation, because, Joe, you've done this a long time, but you weren't doing this in the 70s and 80s. And I think the inflation just makes the normal corrupt business cycle that much harder to predict and understand. And inflation usually in these spikes, especially if you look at the 70s, 80s, it goes up, it goes down, it goes back up, it goes back down. And that bullwhip, Joe, the bullwhip, which I haven't talked about in a while, but I was looking at that earlier this year. I think we're heading into that. I think the inflation so-called is going down, and then we're going to have the recession coming in. But I think the inflation's not going to stop. And I actually believe, Joe, that they could lower the rate sometime early next year. I think they're done, like you said, they're done. But man, I'll tell you right now, when they start to lower the interest rates, in the past that shows inflation roars back as soon as they lower it just a little bit. That's what I think is getting ready to happen, Joe.
Where is all the money going to come from? How are we going to pay for it? (800-951-0592) Patriot Radio News Hour. Gold's up $25 here. Let's just $19.90 right now on gold. Silver off by just a little bit, up 44 cents right now, $23.97. Yesterday, we were running those $5 liberties, and if you had bought 20 or more, you got a roll of the Ike dollars, the 1971 20% silver Ike dollars. And it's kind of funny because yesterday I told you, man, they're just under $5. Well, with today's move, now they're over $5, right? I mean, just that quickly. But we had one left yesterday. I scrounged around today. I've got two. So that's $25 liberties. They're going to be $555 today. The gold's up $25. What can you do? I want to make sure I've got this right here. Yeah, $555 if you buy 20, which will be $11,100, and you'll get a roll of 20 of the silver Ike dollars to go with it. Nice little stocking stuffer. By the way, if you want the Trump coins, we're almost out now. I've got a few of the 45th president. And Brittany told me today we've got about 100 of the mugshot. The Trump mugshot, they're at $30. So if you're looking for, a little stocking stuffer or what have you, make sure you get those Trump coins ordered now because we just don't have more available. But $5 gold, $560, 1 through 19. I've got some for people that, hey, can't afford 20. If you buy 20 or more, $555. That's $11,100. And you're going to get a roll of silver Ike dollars for doing it at 800-951-0592. And then remember, $20 gold. Listen, this is where it's at. 1 through 19, $21.95, 20 or more, $21.75. You just can't go wrong right now because the gold and even the paper gold and silver markets are telling you something isn't right in these debt markets, Jason.
The Ike dollars are 40% silver, Joe. 40% silver, right?
No,
I don't think they made it. Did they make it 20%?
Yeah, 0.209 per coin in each coin. Maybe 40%, but the meltable silver. 40. Sorry,
the coin is 40%
yes,
silver.
40%, yes, but it equates to
over a fifth of an ounce of silver.
Yes, there you go. Yeah,
I
you're
was
right.
a little confused. Like, wait a minute.
You're saying,
I don't remember 20%
we're saying the
going.
same thing. Yes, It's
Yeah, there's a
40%
fifth of an
silver,
ounce of
which
silver.
equates to a little over 0.2 of an ounce of silver in each coin. Yeah.
Yeah, there's a little less than $10, a little less than $8 of silver melt value of actual spot silver in each of those coins. So yeah, that's a pretty good deal, Joe. You're getting a nice freebie if you buy those $5 liberties. So that's I would
it's
suggest getting that one.
$100 of silver. It's $100 of silver at melt.
Yep. Just face it. It's a good time to buy at all. And Joe was talking earlier in the show. Gold goes up a little, gold goes down. The premiums go up, the premiums go down. One thing just to remind you guys out there is, the smart thing is always to buy a little at a time, and you can cost average. Because that way you can get it when it's lower. Yeah, you buy it when it's higher. But a lot of guys that try to play I'll try to get it every time it's lower, they always kick themselves in the butt when suddenly gold shoots up and never comes back down. A lot of our smartest buyers are really good at buying the dips, but then suddenly it goes up and keeps going up, and they're waiting, and then it doesn't come down until it's at a new high. And we may be looking at that right now. We don't know when that's going to happen for sure, but this has some sparks of that getting ready to happen. And so the metals program is a great way to avoid all of that. You have 4 quarterly deliveries of your metals, Joe, right? And you can sit back and not worry about the timing of the buying. You just simply put the monthly money into your account, and you get quarterly deliveries, right, Joe? It's a great way to have to really have stress-free buying.
Yeah, a lot of people, and that was a program we set up for the small guys. Hey, $100. Look at today. I'm running a special. It's $11,100. If you wanted the big special, right, the $20 gold pieces, $21.75. That's $43,500. But in the metals program, you can do as little as $100 a month. You get 4 physical deliveries a year. So basically, what we do is you would leave a card on file with us. There's the $100 is the minimum. There's no maximum. Heck, we got people doing $5,000 a month. We got people doing $1,000 a month. We got people doing $500 a month, $300 a month. Got to do at least $100 a month. And at the end of every quarter, we total it up. We make big mass buys, so we buy cheap. And then we ship the gold to you. And just like everything, there's no fees here. We don't charge fees. There's no setup fee. What if I want to cancel? What if I want to put it on pause? We don't charge you for any of that stuff. If you're not picking up, we charge you a shipping fee. But outside of that, that's all there is to it. And like Jason said, it's a great way because you're buying at all levels, right? The tops, the bottoms, and everything in between. But when we really look at what's happening here, we've got a big problem. I mean, Social Security and Medicare, that's $3,000 or $3,000. $3,000. That's $3 trillion. We only collect $4 trillion in taxes. Throw in military spending. Well, guess what? We're now at $4 trillion. Wait, we haven't paid any interest on the debt yet. Oh, wait, now we're at $5 trillion. Right? But we haven't paid any salaries. We don't have the judicial system, the Department of Energy. We don't have schools, right? We don't have any of that. We don't have the court system, right? We haven't paid the Federal Reserve. We haven't paid, on and on and on. We haven't given out food stamps, rent assistance. None of that stuff. We're spending over $7 trillion. We went into COVID. The government ramped up the spending. They gave everyone a ton of money. So tax receipts got to like $4.5 trillion. Well, they're going to be like $4 trillion this year. Maybe less. And they still want to spend $7, Jason. I mean, the math is pretty simple, right? The math is simple. The dog doesn't hunt, does it? And at the same time, the Federal Reserve, they're trying to get rid of their treasuries. It's a disaster waiting to happen. 800-951-0592. Jason and I, we're coming right back. 800-951-0592. Joe Biden met Xi Jinping yesterday. I'm sure everybody saw it. Yeah, another one of these. Was it a senior moment where Biden called Xi Jinping a dictator? The Chinese not really happy. It's interesting, the Chinese message. Hey, we can either be partners in the world or we can be enemies. There will be no in-between, which I thought was very interesting. Remember yesterday, how much gold does China have? I don't know. Man, I hope the guy, Frisbee, I hope he's not right. If they come out and say they've got 16, 18, 20,000 metric tons of gold, look out. We got that. Houston, we got a problem. And then we got a guy in the White House who doesn't have all of his faculties. That's about as nice as I can say it. And then how about today? When nobody, I don't know if anyone's looking or not, Israel just said, hey, we're going into South Gaza. So they sent everybody to the south, apparently dropped leaflets in the south now saying, get out. Jason, why do I just have this bad feeling? Because I accidentally saw some Fox News yesterday. You guys know my wife watches Fox. She just does. So if I turn the TV on, chances are Fox is going to pop up. And the big headline on Fox, time to put an embargo on Iranian oil. And I'm like, oh, here we go. Right? Because isn't that how it starts, right? It usually starts that way, right? Starts there with the media, and then all of a sudden it becomes a reality. And now Israel's like, hey, we're going into South Gaza next, right? It just seems like we're going to end up in some form of confrontation with Iran. Israel's made it very clear. Hamas can no longer be in power, period. End of story. That is their stance. Whether you like it or don't like it, it doesn't matter. That's their stance. Iran funds Hamas. Is Iran going to stop funding Hamas? I don't see why they would. Which kind of leads me to believe, Jason, what? Well, that's why we got to go after Iran, because we can't have Hamas. Hamas isn't going to be in power anymore, and the only way to, you know how it is. You got to follow the money, right? How do you got to cut off the money? I don't know. I'm just putting these pieces of the puzzle together because it's the first time I've ever seen anything about embargo on Iranian oil. And now today, Israel has dropped leaflets and made the phone calls and done all this stuff, saying everybody in South Gaza, you got to move even farther south into Gaza. I don't know.
Right, Joe. This is quite frankly the beginning of this thing. I know there's a lot of people out there that think, well, maybe we can calm this down, it'll go away, it'll stop, because there's been flare-ups in the Israel part of the Middle East before where it didn't turn into a big deal, but this is not the same thing. When 9/11, they're calling it their 9/11. When 9/11 happened, it was Saudi Arabians. They gave us the indication that the terrorists were in Afghanistan, which then was the excuse to go into Iraq. There you go. That's how fast. And nobody really remembers the first few months of Afghanistan and Iraq. What do you remember? All you remember getting Saddam Hussein. You see him, they hung him, right? That was months and months and months later. That was months later. And then Afghanistan, how long did that last? Right? Now, I don't know if Israel's going to, occupy certain parts of Gaza for 20 years, but it sure is. Seems like this is a stage, right, Joe? That you stage one, secure Gaza. Stage two, where does that go? Is that the Golan Heights? Is that Syria? Because Americans were bombing Syria,
Lebanon,
were bombing
right?
Iraq.
I don't know.
Yep.
I don't know. I thought going into the hospital yesterday, they went into that hospital where they said Hamas was, running operations and all that stuff. I thought, okay, maybe this is a time now where we're going to settle down, and instead what we got is, nope, now we're going farther in.
Going farther in, Joe. Going farther in. So we'll keep a watch on this, because this very easily this will be the excuse if markets start crashing late this year, more likely early next year. This will be the finger that gets pointed at. Well, it's the war's fault. It's the war's fault. Meanwhile, by the time we get there, gold and silver is probably going to be so much higher than it is now. You'll be scratching your heads like, man, I should have bought it in November of 23 when Joe and Jason said to buy in October, in September, in August, in July of 2023. These months were the months that that'll be our I told you so moment, Joe, for sure.
Crude oil is down $3 right now.
Right.
It's down to $73 and change. And of course, why? And the answer is simple. Because we've slowed down here. Consumption here is falling. Period. We're at record high production, 13 million barrels a day, right? Things are great. Why do I got the feeling like, well, you know what? Since oil's so low, let's just embargo Iran. It just feels like this is what they're setting up. I mean, we've had these oil inventory reports the last few weeks that border unbelievable. The amount of extra oil that all of a sudden we have. I don't know, Jason. The whole thing just feels like a setup.
Isn't it always a setup, Joe? Somebody's always planning. Somebody's always planning, Joe. We have to try to react to it as best we can. That's why you listen to the show. You gotta know when to buy gold and silver. That time is now.
800-951-0592. Patriot Radio News Hour, final segment coming up. $800-951-0592. Down to my last 20. If you want the $25 Liberties, $11,100. You'll get 20 of the 40% Ike silver dollars, which is essentially about melt value. Each one of those has about $5 of, a little over $5 of silver in each one of those coins for the 11,100. Individually, if you just want a few $5 libs, they're $560. And then $20 gold pieces, 1 through 19, $21.95, 20 or more, $21.75 at 800-951-0592. And Jason, I guess, we'll just continue to watch how all of this plays out. Very strange, right? Kind of a strange reaction to the CPI report. A lot of volatility in the U.S. Treasury market, which is very, very unusual. Not to mention the government saying, "Hey, we're gonna kick the can down the road, a continuing resolution into next year, no cuts to the budget." At a time when I guess these Congress people just don't really understand anything when it comes to the struggles that are happening right now, and of course we know they want money for Israel, they want money for Ukraine, they want money for disaster relief, they want money for the inflation reduction, right? All of these plus, Jasons. And the consumer, listen, the consumer's not dead. Let's not go yet, right? We're not dead, but there definitely is a major slowdown, and the problem is, does that slowdown, does this snowball, or are we going to get some better data between now and the end of the year? And at least for the retailers, anyway, their answer is no. They don't think it's going to get better between now and the end of the year.
Well, on top of that, it was a couple of months ago, I think. It was in October or even September. They said that a lot of these retailers were hiring seasonal employees. So they're expecting things to be slower because they're like, look, we're not going to hire anybody extra because we know that the holiday season will have extra buying, but it's not going to be tremendous, and we're probably going to just lay off a bunch of people next year. So why hire a whole big buttload of employees, Joe, to have to fire twice as many in January?
Yeah, I forgot all about that. That's a great point. Seasonal hiring, a big step backwards. Which just tells you a lot of these companies, they had such a hard time finding employees. They really don't want to let them go, and let's just get to the holidays. We keep everyone employed, but is that a harbinger? Does that mean that there's going to be bigger actual, what I'll call real layoffs? Because the season guys, okay, season's over, off you go. Thanks for helping out. Is this year going to be, well, we didn't really hire the seasonal help, off you go, good luck finding a new job? I don't know. That seems to be a logical conclusion that I think a lot of people are thinking is going to happen.
Absolutely. Agreed, Joe. Agreed. So we'll be watching it. 800-951-0592. Right, Joe? Call the number. Get set up with the metals program.